What artificial intelligence does is it gives the individual much more horsepower to do things more efficiently and effectively. And so we're using AI in three ways. One, on the prospecting front, getting to more people more quickly in a more effective manner. Secondly, we are using it to market the properties that we are currently handling. And then thirdly, interpreting market data. And if you don't follow me on social media, I'm a very big proponent of proprietary databases, procuring your own data. That gives you a competitive advantage. You have something nobody else has.
Ladies and gentlemen, my name is Jesse Fragale, and you're listening to Working Capital, the real estate podcast. My special guest today is Bob Knakal. Bob, if you've been living under a rock for the last 20 to 30 years in real estate, you'll know who he is, but he is a New York City broker. He has been doing this since 1984. Over that time, he has brokered the sale of over 2,300 buildings, having a market value of approximately $22 billion. For 26 of those years, he owned and ran Massey Knakal Realty Services, which was eventually sold to Cushman & Wakefield. Moved into JLL for a period of time. And then recently, I believe it is BK Realty Advisors, an investment sales and capital market brokerage firm that Bob has started. So you're a one-man show now and probably in hiring mode, I'm assuming. So Bob, thanks for coming on. How are you doing today?
Jesse, I'm doing great. So great to be with you. And I'll say BKREA now is up to 12 people. And so not a one-man show, but having fun working with some great folks and, doing what I've been doing for the past 40 years.
That's great. We were chatting just a little bit before the show here. A lot of people at our firm at Avis & Young, I was talking about having you on the show. So even up here in Toronto, I think everybody's really excited to hear this conversation, and your reputation precedes you. So I think the best way to sum up your bio is on your LinkedIn with one sentence: I sell properties in New York City.
Yep, that's it. That's what I do. And as I said, been doing it a long time, and very lucky that I found a job that is not only a career, but it's a hobby also, and really absolutely love it.
That's great. So for those that don't know your background, Bob, maybe you could talk a little bit about how you got into the real estate space, specifically in New York, and what you do within that space. Because obviously, as you know, there's a lot of different paths that you can take in our world.
Sure. I grew up in a small town in northern New Jersey called Maywood. That's near Hackensack or Paramus. And folks may know those towns, but probably don't know Maywood. And went to the Wharton School at the University of Pennsylvania. So wanted to be an investment banker and work on Wall Street like every other Wharton kid did back in those days. And got a summer job at Coldwell Banker of all places. But I went in with my resume thinking the place was a bank. And when I set up the interview for the following day, went to the library that morning, and when I saw that Coldwell Banker was a real estate company, almost didn't go on the interview, but they were the only ones hiring college kids for the summer. Took the job, loved it, went back my next summer, ran the summer internship program, and then my third summer, I got my New Jersey real estate license and was showing industrial space to industrial tenants for an industrial broker there, Tom Mullaney, who actually is still a good friend of mine. And then started with CB in Manhattan when I got out of school in '84. So got into it completely by accident, but really feel so blessed that I found something that I enjoy so much.
So from CB, eventually you start Massey, and like I said from the outset, sell it to Cushman a number of years later. What was that move like from CB to kind of starting your own thing?
Yeah, well, back then, I mean, I was 26. Paul Massey was 28. We were wide-eyed, ambitious, full of vinegar, as they say, and thought we could take over the world. But I'll tell you, it was a really challenging thing. We started the business in November of '88. The savings and loan crisis was just getting into full mode by mid '89. And it was tough sledding for a while. Ran the business on credit cards for a number of years. Ran our personal lives on credit cards for a number of years. But there were certain inflection points in the history of the company that really changed the course of the firm and served us well. First one was, we had a geographic orientation towards the investment sales business with a broker working in each neighborhood in Manhattan. When we filled all those territories up, we said, okay, what do we do now? Do we get into office leasing? Do we get into retail leasing, mortgage brokerage? And said, look, we don't know anything about those other businesses. We know how to sell buildings. And let's go out to Queens and open an office in Queens. And we opened in Queens and then opened in Brooklyn. And that was a big inflection point for us. And then 9/11 happens. And, we started the business '88. By September of 2001, we had 21 people. And right after 9/11, every company was downsizing. We were in a recession nationally. We have 9/11 happen. Companies are laying people off. These were great quality people. They were brokers, they were bankers, they were lawyers, accountants. And Paul and I said, you know what? New York is tough. We're going to bounce back from this. Let's go hire all these people. And at the time, he and I were both interviewing everyone who applied for a job with us. But we said, let's go out, hire a director of HR, hire up all these people. So we went out and, as I said, we had 21 people on 9/11. 2 years later, we had 150 people. So by the end of 23, the investment sales market in New York is coming roaring back. And we had boots on the ground that were well established. We had our Queens office up and running. We had our Brooklyn office up and running. We were in the Bronx and just really took advantage of that market. And, 04, 05, 06, 07, those are 4 unbelievably great years. And, we were eating the lunch of all the big national and global firms. But we were very, very granularly entrenched in our local markets. And, then we had another inflection point in 2011 where we had filled up all the sale territories in the 4 boroughs. We didn't cover Staten Island. Staten Island operates more like New Jersey. But we had all the sale territories filled in. So again, we're faced with this dilemma. Do we get into different service lines, or do we increase our geographic footprint? And we went and looked at Boston and Philadelphia and DC and Chicago. Chicago would have been the market that we went to. But what we decided was that we had, decades-long relationships with a lot of folks in New York. Let's just offer them more services. And so we got into the mortgage brokerage business, and that was a great business for us. And then we end up selling the firm in 2014. So, but it was lots of ups and downs, peaks and valleys. It's not easy to run a brokerage business. And, I have to say we got very, very lucky with the way we exited. And but I do believe you need luck, but I also believe the harder you work, the luckier you get. And it was quite a ride for 26 years and 46 days.
I like that. So you had this role of somewhat of a player coach with starting companies and then being in brokerage, and you've come back to brokerage in the past and then now starting your own firm. It's a bit of a different skill set, a lot of overlap for both of those roles. What is it about starting the firm, kind of going outside of traditional brokerage where you can maybe start a team within a company that kind of excites you, that it seems like you gravitate towards?
Yeah, look, I'm very entrepreneurial by nature. I think there are pros and cons to every platform, whether you're at a small shop, a medium-sized shop, a giant shop, whether you're working for yourself or working for someone else, there are pros and cons to everything. So I think what you have to do is try to take advantage of the positives and keep your head down from the negatives, and try to do what it is that you feel you do best, that you want to do, and how you think you can help the clients the most. Because at the end of the day, that's all that really matters is, are you servicing your clients well? Are you getting great results for them? Are you putting them in a position for them to make better informed decisions? If you do that, then everybody's happy and you make some money, and that's a nice result.
Yeah, and I like something you said in an article. I think it was a Real Deal article and I want to ask about the map room, but they were talking about one of the rooms that you have there, and it was you leaving JLL and starting your own firm. But you said something to the effect of, I don't think 30 to 40% of my clients even know the company I work for. And the clients, they choose the person usually before the company. And I definitely see that in our work. And I think your one caveat was, unless we're talking about multinationals that have a very specific mandate. Yeah, maybe you could expand on that a little bit when you talk
sure.
about.
I mean, I think what it really comes down to is the understanding that the different aspects of commercial brokerage are very, very different businesses. Office leasing is a very, very different business from mortgage brokerage, and very, very different from investment sales. If you look at office leasing, if you're working with big users of space, occupiers of space, they're in space all over the nation, all over the globe. And they may really like to work with a firm that they can leverage off of in different cities, different countries. And I think mortgage brokerage operates the same way. I was shocked as I got to know the mortgage brokers at JLL well, that, for most of them, 75% of their business was done outside of New York. So having that global platform, that global footprint was very important. But the investment sales business is very, very local. Most of the sales brokers I know work only in New York. And there are some that work in other markets and things like that. But I think it really is much more of a local business than the other disciplines are. And so I think, from what I've seen, particularly with the non-institutional owners, there are 30, 40 big institutional owners that, are giants. And I think they feel as if they need to spread business around to a number of the larger firms. But when you talk about private capital, when you talk about high net worth individuals and families, they're relying on their relationship with the broker. I don't think anybody hires somebody because of the firm. And maybe the firm will help you get in the door, might get you the meeting, might grease the skids, so to speak, to get you in there. But at the end of the day, you have to develop that relationship with the client based on your capability, your market knowledge, your likability, and you build that relationship. And I really do believe, I said it and it wasn't tongue in cheek, I think 30, 40% of my clients have no idea what company I'm at. And that was actually the thing that precipitated the whole baseball business card, was trying to make almost a joke of letting a client who had been a client for over 30 years, who 4 years after I had been at JLL mistakenly thought I was still at Cushman & Wakefield. And so I had to tell them, no, I've been at JLL for 4 years. And so, as a kid, I always collected baseball cards. And I was the kid who always spent more time looking at the back of the card than the front. Yeah. And I loved the stats. And so I said, you know what, let me put this baseball card together for this guy. And I was just going to send it to him. And all the guys at the office saw it and said, wow, BK, this is the coolest thing I've ever seen. You got to do a lot of these, send these out. And, one thing led to another. And now it's kind of it's gone viral, I guess you'd say. But it's a neat way to show what you've been doing, where you are, and that kind of thing. But yeah, I think investment sales is a very, very local, very personal business.
Yeah, I like that. We'll have to get the hockey equivalent of that up here. In terms of so you talked a little bit about the 80s, the 90s. There's been a number of inflection points in the market, as you know, early 90s and for commercial real estate, the economy, early 2000s, '08, and now we're slowly living, I guess, out or through a kind of a secular shift in the way people are using real estate from a tenant standpoint, but affecting purchasers, sellers. We see New York as kind of a bellwether for not just the States, but for North America and the world. What are you seeing from the perspective of the sales you're doing in terms of the asset classes and how those have been impacted? And maybe the most obvious one right now is the shift that office is going through. And I'm sure New York is feeling a lot of the same things the other major markets, other cities in North America and the world are feeling. So what are your thoughts on that?
Yeah, well, Jesse, I think, this is now the fifth correction that I've worked through. And I will tell you the main difference between this one and the previous four are that in the previous four, every product sector was getting hurt just to different degrees. Today, I think different market segments are moving in different directions. In New York, the industrial market is extraordinarily small, but is doing relatively well. The retail market is on the upswing today, but retail started to get negatively impacted years before the rest of the market did. The land market is starting to turn the corner. We're starting to see some upward pressure on land values. And if you look at the multifamily market, however, which is the biggest sector of the market in terms of number of buildings, we have significant policy headwinds in that space and big changes within that arena. And then the office market you mentioned, still lots of wood to chop there. And you have to differentiate between Class A new construction office, which is still doing relatively well, but B and C office is really, really having a tough time. And, on one hand, I think it is the biggest buying opportunity I've ever seen. Even more so, my whole career, I used to say the savings and loan crisis was absolutely the best buying opportunity. And there are a lot of people who made fortunes at that time. And in the same way, I think those same fortunes can be made now. And people say to me, "Oh, Knakal, you're a broker. Of course you're going to say that." Well, at the same time, I'm telling every single seller not to sell unless they absolutely have to, or they have a very compelling strategic reason to do so. But it's really remarkable. We have buildings selling for the same prices per square foot that they were selling for 20, 25 years ago. A lot of people, unfortunately, are going to get hurt. A combination of the interest rate increases that we've had, which was precipitated by a complete misdiagnosis by the Fed of what was happening in the market, but disproportionately has adversely impacted real estate. And the fact that there are a lot of people who have debt on their buildings at twice the price per square foot that buildings are trading at today. And it's tough to get out of that because when you have 400 a foot in debt and your competing property across the street is selling for 200 a foot, it's very, very difficult for you to compete for tenants. And so we have in New York in that B and C space, I think some of it will be renovated and upgraded because there has to be a low-cost provider of space. Every office tenant can't pay $250 a foot in a new building. Some of it will be converted to residential, and there's been a big push for that. And we sorely, sorely need housing in New York and have way too much vacant office space, close to 100 million feet of empty office space. So that is a synergistic relationship. But then based on where some of these buildings are trading, even if you layer in demolition costs, then you're going to see a lot of these buildings demolished to make way for new construction. So, the B and C office are falling into one of those three buckets.
Yeah, and we see that in our market as well. And I think at least there's a portion of those buildings, depending on the floor plate, that can be candidates for conversion. But yeah, I think that B and C class, larger floor plates that don't lend themselves to conversion, it sounds like demolition or a large write down of the asset. But even then, we're seeing that there's just far less demand for non-transit oriented BC class buildings. In the past, the West End in Toronto was a very hip area for a lot of tech companies to go to, and they wouldn't want to be with all the suits downtown. Now it's kind of reversed. They want to be near transit. And if there's a drop ceiling, they'll just have to deal with it.
Yep, that's right. It's a very, very interesting time in the office sector.
So in terms of the changes and things that we're seeing in our industry, you were talking a little bit, I think it was on Real Deal as well, about your map room and about artificial intelligence. And I think one of the takeaways was that it's not going to be artificial intelligence replacing our jobs. It's going to be people that know how to use artificial intelligence. Those people are going to be the ones, those brokers, other professionals that are going to get ahead. Can you expand a little bit on what you mean and how you guys are utilizing technology?
Sure. Well, very, very simply, if you make 10 prospecting calls a day versus making 200 prospecting calls a day, who's likely to get better results? If you market your property to 100 investors a week versus marketing to 2,000 investors a week, who's likely to produce a better result? And you go on and on with examples, but what artificial intelligence does is it gives the individual much more horsepower to do things more efficiently and effectively. And so we're using AI in three ways. One, on the prospecting front, getting to more people more quickly in a more effective manner. Secondly, we are using it to market the properties that we are currently handling. And then thirdly, interpreting market data. And if you follow me on social media, I'm a very big proponent of proprietary databases, procuring your own data. That gives you a competitive advantage. You have something nobody else has. Anyone can pull a report. A high school kid could pull a report from a third-party aggregator. You're not really differentiating yourself that way. But one of the interesting things about the data interpretation is that while it probably has the most upside potential, also is going to be the most difficult for the industry to utilize, mainly because most data sets are not that accurate. And for data sets to be accurate, and one of the main thesis of data interpretation is that absolute numbers don't really mean very much. It's all the relationship that number has to others, and are the numbers going up? Are they going down? To what extent are they going up? Are they going down? And to illustrate that, if I told you in 2019 in Manhattan, there's 26.3 billion in sales volume, you really don't know what to think about that, right? As a guy from Toronto, you're in the real estate business. Well, what is that? Is that a good number, a bad number? Well, if I tell you that in 2015, at the peak of the market, it was 57.4 billion. And in 2020, during the pandemic, it dropped to 11.1 billion. All of a sudden, the 26.3 starts to have some feel to it. In the same way, it's the relationship between the numbers that really matter. And the relationship loses integrity if the methodology for determining the numbers is not consistent over the time period that you're looking at. And I know that, if you ask someone to calculate a cap rate, are you looking at trailing 12? Are you looking at forward 12? Are you making projections for vacancies? What are you projecting for vacancies? What's your stabilized vacancy factor? All these different things. Everyone has a different methodology for how you create data sets. But if the methodology is not consistent, the relationship loses something. And so that's what we're really excited about, is they have data sets now that are 40 years old that have used the same exact models, the same approach, the same methodology for calculating the data. So there is integrity between the numbers. Now we're trying to use AI to determine what predictive things can come out of the data sets based on on comparing the fluctuations in these values to various niche specific metrics like rents and occupancies and things like that, but then also looking at macroeconomic factors and to see if there is a high correlation for telegraphing changes in the direction of the market based on a metric or a group of metrics. And we'll see what it can produce, but we're really in the heat of trying to figure that out now.
So we see different companies in our space, the different brokerages have in-house, different proprietary aggregation of data, different property lists and information. And then we see these, big juggernauts like CoStar who have basically tried to do the research side of things, calling up brokers, asking what net rents are. And I think most agents would say that, some of the information is okay, some of it's not so good. But do you think it needs to be done in a kind of a network effect way where CoStar, because they have almost a monopoly on the subscriptions with brokerages, or do you think it can be done, accurate data can be done within smaller brokerages and being able to build your own data sets within your company? Because I feel sometimes there's a bit of a disconnect between the two.
Yeah, I think it really depends what you do, what you focus on. If you are the retail property sales guy for Kansas City, I would want to know how many retail buildings are in Kansas City. How many sold last year? How many sold the year before that? How many sold the year before that? What was the average price per square foot? What are the average cap rates? How do I determine that a property is retail? If it's retail on the ground and has some apartments above, is that a retail property? Is that a mixed-use property? What bucket does that go into? All of these things, you have to have a set of criteria by which you determine what's included in the data set and what's not included in the data set. But becoming an expert in that particular niche is what will drive you. You should be able to come up with a data set that is very unique from what anyone else has. And by constantly making calls to these folks, transacting in that space, you'll develop a data set that is very, very robust and that no one else has.
I want to switch gears a little bit in terms of how you approach negotiations when it comes to sales. Everybody in our industry every successful person seems to have something that they do a little bit differently, a lot of big personalities and different approaches. When it comes to negotiations that you have for the properties that you sell, are there pitfalls that you try to tell the younger people that work with you to avoid, or things that you encourage when it comes to negotiations and stylistically how you negotiate with potential buyers?
No, I think my approach has been very simple in that for years the value proposition was, I only sell buildings, I only represent sellers, I only work on exclusives, and I only work in New York. And that keeps things very simple. And so my job as only representing sellers, I need to maximize exposure, get as many people as possible interested, create a level playing field for the buying community. There's no favorites or buyer du jour that you want to push a deal to. It's a completely level playing field. Somebody that I've sold 50 buildings to has the same opportunity as a new buyer coming into the market. And I'm just trying to get the maximum price for my seller. So, there are a number of techniques you use to try to get folks to pay the highest possible price. But, the market here is very, very efficient. It's not unusual for us to market a property and even in today's world get 20 bids, 25 bids. So the market is very, very efficient. And usually, that meaty part of the bell curve where all the bids are is 10 to 15% below what it will actually sell for. But usually there are 3 or 4 people ahead of that pack. And you use various techniques to try to extract the highest possible price from them.
I like it. You mentioned the macroeconomy and interest rates. It's clearly something that impacts the investment sales side of things. How has the last couple of years been in terms of you representing sellers' views on selling a property, if it's the right time to sell, even with the current, inflation numbers, both for the US and Canada, and where, still a bit of a question mark as to where exactly interest rates are going to go over the next 12 to 24 months. How do you approach that conversation with your sellers?
Yeah, well, Jesse, for a while now, we've been telling people not to sell, as I said earlier, saying don't sell unless you have to, or strategically you have a very compelling reason to do it. Some folks are selling because they need capital, because almost every refinance today is requiring cash in. So some folks are selling assets because they need the cash to put in to a refinancing to hold on to the properties they want to hold on to. But there are a variety of reasons why people are selling today. That refinance risk is a big one. Some people, for policy reasons, want to get out of a particular jurisdiction and into another one. There's portfolio realignment. People may want to go from having all their assets in one market to being geographically diversified. Some may want to go from Class B and C properties to Class A properties. There are a number of reasons that fall into that basket of what I call the compelling strategic reasons. But generally, if a seller is completely discretionary, why would you sell today? It's very, very challenging. There's downward pressure on values. We see some people starting to look at wanting to sell retail properties, but that's because the retail sector is on the upswing. The hotel market, for instance, is on the upswing here in New York also. We have 120,000 hotel rooms, 30,000 of which are no longer hotel rooms. We had 14,000 converted to student housing and other uses like that. 16,000 are occupied by the migrants. The city has really been cracking down on Airbnb. So what's happened in the hotel sector, which the hotels lost 50% of their value during the pandemic in 2020. Those values are up now because we have ADRs that are increasing, occupancies are increasing. It's almost impossible to get a hotel room in New York today. So we see folks who are looking very bullishly on that sector of the market. But I think there are different motivations that push and pull people to either sell or not sell, or buy or not buy. And, I just think that today, generally, I don't know that people should sell unless you have some externality that is forcing that.
So on the kind of the topic of the outlook, you mentioned a little bit earlier, New York is a resilient place. I think we track data on return to office, or just basically people's cell phone data coming back into the cities. I think New York is done better than Toronto, but I think there's still quite a bit of gap between the return to the cities and having people working in the cities. Do you think that is a trend that is going to be a permanent thing, where people are in the city, at work 3-4 times a week? Or is it something that you think is going to bounce back to a certain threshold, maybe not pre-pandemic, but some sort of equilibrium that we're going to call the new normal?
Yeah, look, I'm a big proponent of being in the office. And, it's interesting. If you asked me in early 2021, I would have said, I'll be maybe a 2 or 3 day a week guy in the office, mainly because, as a sales broker, my goal had always been contacting 50 owners a week and getting around to asking them if they wanted to sell anything. During the pandemic, working from home, I was up at my country house in Connecticut. I was connecting with over 100 owners a week because I didn't have the constant interruptions that you typically get in the office. But there are also benefits to those interruptions. And so, I think that because of the productivity that I was gaining by working out of the office, I said, I'll go to the office 2, maybe 3 times a week. And what I found is, as soon as we started to get back to the office, I'm now in the office 5 days a week. And I think part of that is, hey, it's hard to teach an old dog new trick. I have a comfort level. I'm still in a tie most days. So I feel comfortable there. But I think that for personal growth, I think particularly for younger people, it's very, very important to be in the office environment. I think you overhear things and get in the way of information. Maybe you're in the lunchroom, maybe you're getting a cup of coffee, but you overhear people talking about a deal, and a question will come up, or a term you never heard of will come up, and you ask about that. So I think there are so many benefits to being in the office environment that I think people will want to get back to that.
Yeah, that makes sense. All right. Well, Bob, I want to be mindful of the time here, but on that note, for the last question I'll ask you, in terms of the advice you would give younger individuals that maybe are a little hesitant to get into our market, kind of like with your first job once you found out it was a real estate company, just given the past few years, it can be challenging to come into this industry in the best of times. But what would you say to somebody that is interested in exploring commercial real estate, whether that's in brokerage or another area in our space?
Well, Jesse, what I tell young folks all the time is find something that you're passionate about. If you want to get into real estate, that's like saying, hey, there are 800 flavors of ice cream. What one do you want? Do you want to be on the investment side, the principal side, the analysis side, of the brokerage side? If you want to be a broker, how many different types of brokers are there? You could rent stores, rent apartments, sell apartments, rent office space, be a mortgage broker, raise equity for people, sell buildings. You want to be a building sale broker. What type of building do you want to sell? Where do you want to sell those buildings? I mean, a million questions, but I think it's important for young people to expose themselves to as many aspects of the business as possible, figure out what they're really passionate about, and then try to become as much of an expert in that particular niche as you possibly can. The three traits that I have seen universally among the people who get to the very top of this business in the brokerage world. Number one, they have expertise. They're an expert at a particular market niche, and they're known as an expert in that particular area. Number two, tremendous passion for the business. And you have to love it, because no matter how good you are, you're going to have tough times. You're going to have just an unlucky streak where a bunch of deals don't happen. They fall apart. The market always has been, is, and always will be cyclical. So through no fault of your own, you may come into a tough time. But if you have that passion and love for the business, you'll stick around to be there when times get better, which they inevitably will. And then the third aspect is the people at the top of the industry know how to use discipline really well. And notice I say use discipline as opposed to have discipline. I think discipline is a tool. It's available to everybody. You can choose how to use it, how often to use it. And like, I love the quote from Abe Lincoln, who said, discipline is choosing between what you want now and what you want most. And so if you keep your eye on the prize and make your decisions based on what you want most and not what you want now necessarily, the good things will happen. So I think those three things, be an expert, find what your passion is, and then use discipline well. And the potential in this business really is limitless.
Perfect. Bob, for those that would like to see what you're doing online or reach out to you, I know that you have got a bit of a social media presence. Where would be the best place for us to send them, aside from a quick Google search?
Yeah, sure. No, I'm on all the major social media platforms. So give me a follow there, or you can go to BKREA.com, or my new website, which we haven't really started promoting yet, but will be in the coming weeks, is BobKnakal.com, where a lot of my social media content comes from boxes and boxes of old material that I've kept over the years. And for the past year or so, we've been working on creating BobKnakal.com. It has thousands of pages of old newsletters and articles and property sales reports and all kinds of things that you might find interesting. So always, feel free, BobKnakal.com, BKREA.com. Follow me on social media. Email me, bk@bkrea.com, and be happy to hear from you.
My guest today has been Bob Knakal. Bob, thanks for being part of Working Capital.
Jesse, thanks for having me on.